Whenever the stock market has a huge correction, this is the time that the winning stocks use to create nice setups and low risk entries. The last correction, which was in 2024, our Profit Punch members managed to catch a portfolio which ran up 350% from the buy point. Today we are seeing many similar stocks because the stock market is currently recovering from a deep correction. So this is a time of opportunity. In this video, I'm going to discuss the underlying stock sectors which are about to create some of the biggest gains. The last stock run was semiconductors. So you saw what happened with SMCI, you saw what happened to NVDA. We're going to see 10 stocks that are likely to return very huge gains. I'm also going to show you how you can profit from these stocks, when to get in and when to profit from them, and when to get out so that you can try to have the maximum gains. Now let's get into it. If you're enjoying this video and want to build financial freedom using the stock market, I put together a free guide called 10 chart patterns that make money. It's based on the exact system that we use at Profit Punch, a financial newsletter and educational hub that sends you A+ stock setups where we tell you exactly when to buy and sell, and also will teach you stock trading from the ground up. These are the same patterns that our members use to catch moves like SMCI 250%, NVDA 200%, Uplavin 350%. The guide is short, visual, and beginner friendly. Just click the link in the description or pinned comment to grab your free copy. Now back to the video. Here we have the chart of the NASDAQ 100. On the weekly chart, I have the 10-week simple moving average and the 30-week simple moving average. This weekly chart helps me see the bigger picture of things. And then in the daily chart, I do have the 20-day exponential moving average and the 50-day simple moving average. Now, whenever you get these corrections, the last correction was in August 2024. That was a good opportunity to buy. We had one here in October 2023. There was one in April 2024. You can see that these are all huge opportunities for anyone to be making money. Now we can see the stock market recovering again. And once it starts recovering like this, our job is to find the strongest sectors, which I have for you in this video. In those sectors, we try to find the strongest stocks because the strongest stocks are the ones which move a lot. And I'm talking about 200 to 300%. It feels unbelievable, but once this happens to you one time, you'll realize the power of waiting and buying the stocks at the right time. Let's get into it. Last year, we saw what happened to our portfolio. If we go to the weekly chart, we can see it had this nice base. It broke out from there. Then it ran up about 90%. The second base that we caught was this base. So it pulled back to the 30-week simple moving average from the nice handle, and then it went up about 400%. I remember seeing 350%, but we can see it was even better than that. And currently, due to this nice correction, we are looking for similar stocks. Now, the first sector that I think is creating a lot of opportunities is utility power generation. And I think it's because AI needs a lot of power to run. So these utility stocks, they're really profiting from this AI boom. And the first one of these stocks is Oklo. Now, Oklo is a new stock. So that's why it's very volatile like this. But this is good for swing traders who are willing to take more risks. So we see that last year it first did this 300% move. Then it did this 130% move. And then here we can see it has formed something like a nice cap with a handle, which is a very good sign. And then it gapped up. This is something called a buyable gap up, something which I teach in the educational hub on Profit Punch. Whenever a stock gaps up like this, I bought this stock that day. This was last Friday. So if you want to get these recommendations and you don't want to miss out, then you want to be part of the newsletter. We have a money back guarantee if you cannot make your subscription back. So join as fast as you can. There is nothing to lose. You can see this nice cup and handle. The confidence that I'm getting is that all other stocks in the same industry are doing the same thing. And I'll show you here. The first stock is NRG, right? So NRG, we can see that it gapped up and it's looking good. The second one is VST. The third one is Oklo. So you can see all of these stocks, they're bouncing in the same way because they're from the same industry. Electric utilities, because they're helping the AI sector grow. So you see from the bottom, NRG has already gone up 100%. VST has gone up 70%. Oklo has gone up 170%. Now, Oklo, since it's a small company, I think which is going to have the biggest gains. So if we look at NRG, it has had this long base. Then I thought it was going to crash, but then it surprised me. So it came, formed a checkout. This is something called a checkout, right? So it shook out this previous base, and then this was a very good buy point here, but I did miss it that time because I was a little bit bearish in the market. So here around $100, this was a very good buy point. It came and reported good earnings again. And then this was another good buy point. Whenever stocks report good earnings and they jump out of big bases like this, is a very good time to add. I did miss that one as well. I don't know why. I think it didn't show up in the screener in the morning. And then it was a good opportunity. But of course, in the stock market, never be sad when you miss out, because in the same sector, there are other stocks. And now here we have VST as well. We can see that it has broken this trend line. It has had a checkout. It has shaken out this previous low, which is a very good sign. And then you see when stocks go through a falling 50-day simple moving average, they don't just run up. What they normally do is that they come back to test it, or they form tight flat handles where you have to wait for them to jump out. So the first handle it formed was this short handle here that you can see. Then the second one formed here. If it jumps out of this one, it's a good time to start adding to your position, because you have confidence that the other stocks in the same industry are moving. I already bought Oklo, so it's my first choice. There's also CEG in the same industry. It is forming the same way. So stocks from the same industry will normally have the same pattern. We're all seeing them form this cup with a handle here. CEG also had this checkout. So it shook out the previous bottom over here. This was a very nice sign. And then it runs up to the 20-day simple moving average. From the chit, it's a good time to start your position. The reason why I did not start my position in this stock at this time is that the market was very bearish and I thought it was going to crash. That is a good time to start, but then another time to enter is when it forms this nice handle or chit in the upper third of the base. That's another time. So if it goes about $305, this is also a stock to invest in, and then you're likely to see some big returns. Now, enough with power generation. The next sector we're going to is technology stocks, and my top technology stock that I'm watching is Palantir. Palantir is one of the strongest stocks in the market. And we can see that it's also showing these nice signs. So we see here this base, right? It has had a checkout. That's the first good sign, right? And then it runs up, forms this chit. So it's a good time to start your position. So I did a swing trade here of Palantir. And then now it's breaking out to all-time highs and it's forming another handle here again. So you see these very tight price actions. And what you like to see in these handles is that you want to see the size of the handle is less than 3 times of the average true range of the last 14 days. So the average true range here, 1.5 of that is about 8%. So I want to see a correction that's less than 24%. The tighter, the better. And then we just wait for a breakout from this. If it breaks out here, it's a good long-term investment because it has had a nice pullback. It has formed a very huge base, a consolidation of about 16 weeks. These are very nice long consolidations that you can count on for big moves. Next one is Aplavin that I already talked about. This one I'm not liking it too much because the high is here and it's forming a handle here, but it is still a very strong stock with very good earnings. I'm waiting for it to jump out of this chit here. Once it jumps out of that, that is a very good buying signal. You see this tight price action. It is a very high performer. It has pulled back to the 30-day. This is a good time for long-term investors to reinitiate their position. Of course, a good time to add was here when it released this good earnings, which is what I did. And then now it's returning to that gap up level. And if it jumps out of this chit on volume, it's going to be a good buy. Another sector that I'm loving is this quantum computing. I'm seeing a lot of stocks in quantum computing going up, and I have 3 stocks for you in that sector. The first one is RGTI. I already recommended it to people in the newsletter. And from the buy point, they've already gotten a profit of about 23%. I don't think you should sell yet because for such big breakouts, you have to wait for it to close under the 20-day simple moving average. So just ride it. So here we can see the last time this stock broke out of this big consolidation, came and formed a chit over here, and then from the good buy point, it ran up about 1,300%. So what this means is that your money was multiplied times 13. So if you put in $1,000, you are getting $13,000 back. You put in $10,000, you get $130,000 back. Do I think it's going to do 1,000% again? I don't think so. But even if it does something like 500%, if you put in $1,000, you're getting $6,000 back. Put in 10K, you get 60 grand back. So I think it's a good risk reward ratio. I think this one is still a buy right now because it has just jumped out of that big green candle. So anyone who's watching this is a live recommendation, which is not part of the newsletter. The next one is QUBT. Also, I recommended it when it released earnings here, so we can see that people who bought it, I am one of the holders of this stock, already have a 40% profit there. The reason why is because I saw that quantum computing stocks have been crazy, right? And then we can see last year it did break out, and then from a good buy point, which is around here, this one did about 1,800%. So whatever money you put in almost multiplied times 20. $1,000 turned into $20,000. Do I think it's going to do 2,000% again? I don't think so. But even if it was to do about 500% or 1,000%, I'll be great. So for these moves, I don't know how far the company is going to run. What you have to do is just buy and then just wait for it to close under the 20-day exponential moving average. The reason I use the 20 days is that these are explosive stocks. If you wait for the 50-day, you've normally given back a huge chunk of your gains from the top. To the 50-day, you already got a 70% drop in your money. But if you just waited for the 20-day, you would have sold around here with just a 50% drop. You still had a very huge profit because you got it around $1, then you sold it around $13. So we see the original stop that I recommended. But now since it is going up, I've already raised my stop to about $10. So this is just a riding trade, free money. Now this next one is a stock that I recommended. So you can see the recommendation. It was an earnings gap up trade, so I recommended it to people in the newsletter. Sign up for that if you want to get these recommendations. I regret not doing this one. I have huge regret because I thought it was not going to run up as much. I thought QUBT was going to have the biggest move, but this one has surprised me. Currently, from the time I recommended it, it has gone up about 130%, right? Of course, the risk was about 12%, so you've already gotten 10 times your risk back, which I missed out on, and I'm sad. But on the bigger picture of things, it has broken out to all-time highs. This is a very good sign. On the weekly chart, when you see this break out to all-time highs in a good market, the reason why it was a good time to get in at this time is that the market was recovering. That's one. These moves normally come from deep correction. Remember the last deep correction was about August? You can see these moves started around that time in August. So you see, normally when the market forms a deep correction, then it forms these really huge setups. You know, these setups and then these stocks, they start to go. That's why I knew we had to jump in very quickly. This was an earnings trade release. You could have swing traded it, but I also told people it is better to just wait for it to close under the 20-day exponential moving average, because a lot of money in the stock market is actually just made sitting and waiting. You don't have to be trading the whole time. So I'm glad that was successful. I hope they're still holding on. Now we move into cyclical stocks. There are two stocks that I'm watching that I think are going to create huge moves. But before we move into those huge moves, let's look at the financial sector. I'm only watching one stock in the financial sector, and it is Hood, Robinhood. So we see that checkout that we saw. You see stocks in the stock market, they also behave the same. Shook out people here, people got scared, I sold. Returns from the nice cheat here. This was a good time to start your position. Since the moving average was falling, we expected it to have a pullback, which it didn't. Now I'm waiting for it to have something called a handle. If it has a healthy pullback and then jumps out of that pullback, this is going to be a very good long-term hold. Why do I say it's going to be a good long-term hold? It has consolidated for about 14 weeks. If it continues consolidating through that hold, it's going to consolidate for about maybe 17 weeks. And then once it jumps out of that, I think it's heading for the moon. I don't know how far it's going to move, but it will be a profitable move if it does happen. And then onto the cyclical stocks. The first one is Kavana. This was a swing trade as well, so people are already in profit. Let me remove this swing trade stuff. This trade recommendations. For these trade recommendations, I didn't really trust this one. So you see this huge consolidation. You like to see consolidations that are very compact and nice to look at. When a consolidation is big and all over the place like this, you cannot easily trust it. That's why I didn't buy this thing immediately, despite the fact that it showed some strong movement. I wish I bought and I held on, but I didn't. So what I'm waiting is also for a handle. You know, like I already talked about in the other stocks, I think it's going to be a great stock. Because if we look at the financials are looking very sweet. And now the one that I'm really looking forward to is Eat. This is a restaurant stock. We can see the earnings. It's a super growth stock. We can see the base here. We can see all of these checkouts. This is also something called the triple bottom. So it comes, bounces, bounces, bounces. Very good signs. And then it goes up and forms this nice handle here. This is a good time to start. You start a position here, right? And then you want to see that it's forming this handle in the upper half or the upper third of the base. But the bad thing about that handle is that if we look at the, at this pullback here, that, this handle is in the lower half of the base. So it's not the best handle. Normally when the handle is, this tight price action is in the lower half of the base, that means the stock might run up 20% and crash, and it will have to set up again. What you'll normally like to see is a handle up here. Also, there's a huge resistance here. You can see this resistance over here. So that's one thing that I'm very wary about this stock. So what you can do is that you can either wait for it and sit out, which is always a good option in the stock market. Or if you're very hungry, then you can just buy right now, because I'm actually going to recommend this one, and put a stop right here. But then you don't want to risk a lot of your account because it is not a very good setup yet. And then once it moves up and forms a nice setup, you can add the rest of your position. Because right now the stock looks like it's likely to just come back and fake all of us out. But yeah, those are all the stock recommendations. Those are very strong stocks that are found in the market. Some of them are setting up, some of them have already escaped. I advise you to sign up to the newsletter, because if you're a beginner, you'll learn all of the strategies. I don't want people to miss out on this move, because once the market just corrected, it's creating a lot of nice setups, and then it will run for about 4 to 5 months from another correction. If you miss out on today, then you have to wait about 4 to 5 months, because I don't know when the market will correct. We just react to whatever we're given, but I know that it does take some time to form these corrections, because if we look at Q1, we can see that these corrections do take their time. They don't come often. The first one is in July, then it runs for about 2 months. Then in January was a good time to start some new positions. Then in April, from the nice one. Then we have a pullback in August, So they do happen, but we only get about 3 or, 2 of them per year. But you have to make sure you get them at those right times. I hope I brought value to you. I hope you enjoyed the video. May the markets be with you.